Candlestick charts are the most popular charting techniques by traders or analysts throughout the world for trading in the stock market. They have been developed in 18th century, we all know, by a Japanese rice trader. That's the story. But they were introduced to the Western world or the modern world by the Steve Nissen in his book Japanese Candlestick Charting Technique, published in 1991. We all been using all the traders, all the even investors or the analysts, those who are dealing in stock market, they all use candlestick chart, and they are the most popular charting techniques to use because their presentation is superb. That's why their use is increasing day by day. But during those years when those candlestick charts were invented or the developed, at that time the volume was very less and the volatility was also not much. But these days, we can see that high frequency tradings, algo tradings, they have increased the volatility very much, and along with that the retail participation is also growing, which is increasing the volume of the trading. So both volatility and volume both are increasing, and they are going to increase very much. Now, volatility has become a very important factor these days in the present scenario, and this factor needs to be addressed while candlestick chart analysis. And personally, I feel that this volatility must be included in candlestick candles also. So let's see what we are talking about. The limitations of the present candlesticks are, they don't tell us whether the high is created first or the low. These candles, they don't tell us that later on we will see in the pictorial presentation that what we are saying. But here the high or low, which one is created first, they don't tell us. That's why the price action story is complete for the given time frame, and they don't tell us about volatility and resulting follow-up action. If you want to know about the volatility, you have to go for the smaller time frame, and then you can understand it. Not less information about the clarity of price action because of this volatility factor, and personally I said it's a poor shadow data presentation. We can tell is also both the shadows are very important these days. Initially shadows were not that much important, but these days because of the volatility, shadow analysis is very important. So let's see what we are talking about. See, these are the traditional candlestick candles. Okay, there are two scenarios. Here the market is price opens, goes down, and then makes a high and then close somewhere here. Okay, now this will be the candlestick for this price action. Okay, open, here is the low, here is the high, and there's the close. Sorry. There is another scenario. Price opens up here, okay, goes up there, high, makes a high, and then selling forces comes down, brings down price till this makes a low here, and then again buying comes up and the price close here. We can see this is a highly volatile price action, highly volatile movement, but the candlestick will be the same. This is the most important thing what we are talking about. In candlestick, we say this is the high, low. We all know about this, okay? But there are certain things. The upper shadow or up wick, we call it, and the lower shadow or the tail. This is the structure of the candlestick. This is the body. Open and close makes a body. If the close is higher than open, so it's a green. We all know. And if the body is green, so what usually we do that we make, wicks or the shadows also the same color, green. Now we know that the wick or the upper shadow is a selling dominance, means the selling pressure is so high that price comes down and close it here. Here the buying pressure is so high that price cannot be prices doesn't sustain, it couldn't sustain below the open, and that's why it pushes price up. So it's a buying dominance area, it's a buying dominance price levels. Now here we can see it's a very low volatile price action. This one, the case one scenario, makes a low and then makes a high and close here. It's a very low volatile price action. We can see one force is very high, the buying force is very high, cleared price direction up upward. In this scenario, what happens? The probability of follow-up is high. Means next day, we know that today the dominance force is buying, so follow-up should be high, because these days the most problematic thing is this: even the candle is becoming clear, the follow-up is not there because of many reasons. So we can see that in this scenario, this is a different scenario. What happens? The candlestick will be the same. In the traditional candlestick, this will be the only candlestick for these both scenarios. Here price opens up here, buyers buyers are pushing price up to this level high, then the sellers comes here and the selling force brings it here. We will say selling force and buying force instead of buyers and sellers, because the same person can be a buyer or seller at the same time, at a different point of time. So the selling force brings down price to here, to the low, makes a low, and then again buying force comes up and closes the price near high, a little bit less than high. It's a quite you can see it's a quite, both forces are strong. The selling force is also very strong, buying forces are also very strong. That's why it's end up in a green. It's a highly volatile price action. What happens? What implies this? Follow probability is low. The next day maybe follow-up will be poor or maybe poor. Now we can see in the bearish candle, in a bearish scenario, what happens? We can say, see, we are all well known. This is the selling dominance area, this is the buying dominance area. But since the body of the color is red, so the both wicks will be red. Here, markets here opens, makes a new high, makes a new low of the day low, and then closes here near the low. It's a clear direction price, low volatile price action, high follow-up probability. The other scenario, it opens here, makes a low, buying force makes a new high, and then again selling force comes up and closes near the low. It's a highly volatile price action. Again, the follow-up probability will be high, but in both the scenario, the candlestick will be the same. So the candlestick is not going to tell you unless you go down and see on the lower time frame. Now, what we are talking about, what we need an advanced version of candlestick. It's been 30 years we are using the same candlestick, and maybe hundreds of years since the Japanese rise traders started it. So we need a different advanced version of candlestick for better analysis. What these candles should include: they should be able to tell us the volatility factor. The high or low has been created first for the selected time frame, for the given time frame. More information about the volatility and better price action story. Yes, every candle is tells a story about the movement of the price during that given specific time frame. More information about the clarity of the price action. Definitely, if the price action is less volatile, so the direction will be clear. If the price action is more volatile, there is less clarity about the price action of the follow-up. Better shadow data presentation, we can say wick or tail. Okay. They should provide, the advanced version of candles should provide price action information in a better way visually. See, candlestick is why most popular, because it provides a very nice visual representation of the price action, and I love personally. I love, and most of the traders, they love it. Okay, these candles should empower better decision making. So now these candles should have the capacity of giving further information so that we can take a better decision. And moreover, they should be simple in design and presentation, yet effective. Definitely, we are talking about that. So what's the solution? The solution is this, that we present you the advanced and renewed candles. We name it AR candles, advanced and renewed candles. They will be able to solve probably all the questions. They will be able to tell whether the high or low has been created first. They will tell you about the volatility, better price action, better shadow or data presentation, definitely, and a simple in design and presentation. Let's see what we are talking about. Advanced and renewed candle, we have developed two versions, version 1 and version 2. Both can be incorporated in the same design. So here are the advanced and renewed candle version 1, where the high and low order has been told. See, the same scenario. Price opens here, makes a low, and the buying comes up and makes a high, and they close near here. This is the traditional candle. But in our scenario, what will happen? Open is here, body will be green, but low will be near the open because it has been made first. Okay, so this is the, we can say number one point, middle point, and this is the close point. So in the first half, this low has been placed and then the high has been made. So the high will be, so we are not using the simple middle line technique which is being used in the traditional candles. They both top, upper shadow and the lower shadow both are the same line. We are just shifting it a little bit left near the open. Okay, so the which one makes first will be near the open, and which is the last one or the second place that goes near the close. So here the low has been made first, so the low will be near the open, and then the close will be, high will be near the close. So this is the presentation here. And if the scenario is different, when the high has been made first and the low has been made secondary, later on, so what will happen? This is the open, makes a high, and then makes a low, and then makes a close. So you can see these both are the upper shadow or wick, but since the priority is different, you can see by looking at this candle that this candle is very clear price direction. This candle shows that yes, follow-up probability is more. There is a less follow-up issue with this, high follow-up probability. Okay, and here the price action is less volatile. You can decide by looking at this already. But if you see that a green candle has the first high, a green candle makes a first high and makes a low and then becomes a green, it means it's quite a volatile scenario. It makes a high, makes a low, then close it here. It's a very volatile. Okay, let's say in the bearish candle, same thing. You can see the right hand side, it's a simple one, opens here, makes a high, makes a low, close. In this scenario, high will be near the open and the low will be near the close. Okay, this is the close area. This one is the close, this is the open, this is the close. Probably it may be this one may be wrong. So this is the close. Here it is the close, this is the open and close. Okay, so in second scenario, opens up, makes a low, first the low has been made and then the high is being made. Okay, here there's high, so the low is near the open, this is the open, so low is near the open in the first half and high is in the second part, that's the near the close. This is the close end, this is the close line, this is the open line. Okay, so this is near the high. In this sense, we can see it's very easy to understand. The first scenario is when the low is made first, bullish candles. So these are the candles, this will be the presentation if we are adopting, if we use these kind of candles. It's a Morobojo, we can say the Sheven candles. The high has been, low has been created first. It opens up and starts growing up. This very clear direction. Here, opens here, makes a low, and then makes a high, then close it here. It's the similar manner. You can see all these things. High probability of follow-up. Now the second scenario, high is created first. Here the volatile price action, low probability of follow-up. Both are the same candles. But just since you have changed the order of, now they are these candles are able to tell about the volatility, about the high and low, which has been made first. Okay, now the bearish candles, you can see the same thing. This is the version 1 we are talking about, in which version 1, what's the significance? Version 1 has the same color of the candle. It just tells about the high or low which has been created first. You can see here very clearly. This is the less volatile. Markets opens here, close goes here, then opens here, makes a high, makes a low. In a bearish candle, if high is made first and low is made second, it's a simple clear-cut direction. But in a bearish candle, if the low is made first and high is made later on and then it closes, it's a quite a, you can say it's a quite a dramatic price movement or the volatile price movement. Follow-up is less probability of the follow-up. Now, we are introducing the advanced and renewed candles or the AR candles version 2, which are showing, we are talking about the better shadow data presentation. Now this is what I'm talking about. In traditional, we are, number one, we are putting the linear, and the second thing, we are using the same color of the body. Here we are changing the colors. everything is same, what we have discussed previously, but the shadow has been changed. It gives a very simple idea. See, this upper shadow or the wick, it's a selling dominance area. Okay, and we know that the lower shadow or the tail is a buying dominance area. When we change the color, this is, the lower shadow will always be the green irrespective of the body color, and the selling dominance area, the upper shadow, will always be red irrespective of the body color. What will happen, we can see here that now we can clearly see, visualize, visualization is very easy. Now we can see that the buying dominance area is not only this, it's from low till close, it's a buyer area, and the seller area is very small. Its selling pressure area is very small, and buying pressure area and the buying area is quite a big one. In the same way, you can see here is a red candle. Traditional candles is the same, but here scenario is different. This is the first low. The low has been made first, so it's a green, and then it's a red one. Here the high is made first, so the high is red, and here is the green low. This is a buying area. The lower shadow of the tails tells us about the buying area. Now we can see clearly that this selling dominance or the selling pressure area is from high till close. This is a clear-cut selling area. So the visualization is better. The visual presentation would be better. So this is the presentation about the AR candles version 2, where the high, low order and the shadow and wick or tail significance already highlighted. This is for the better representation of the selling and buying dominance forces price level. They would show that which are the price levels where the buyers are dominant and which is the price level where the sellers are dominant. Here the bullish candles, the low is created first, so low volatile price action candles will be this simple. But in this scenario, we can see though it's a low one, but the red selling area, since it's red, it's very easy to understand that the selling area is, selling area is much larger than the buying area. In the same manner, here we can see is a high volatile price action area where the high has been created first and the low had been made. In the same manner, we can present it. Now the bearish candles, same thing. It's a high volatile price action area, so low has been made first. So you can understand in this one, it's very easy to understand that the buying area is quite big, though it's a red candle, but quite big buying area. If it has been the same color, mentally we may assume that okay, it's a thin one, there is no buying coming out because it's a red one. But no, when you put it a green color here, it will clearly show that this is the buying pressure area. This is the buyers area where the buyers have pushed the price upward and it closed here. In the similar manner, here we can present the dominance area. It will always be top wick will always be red and tail will always be green. Okay, or the lower shadow will always be green or the upper shadow will always be red. So now I appeal to what I can understand. I think I will be able to make you understand that what is the significance, and it will become very easy to analyze, very much informative. There will be an advanced version, so definitely they will add value to the technical analysis and charting techniques. So I appeal to all leading charting software providers to consider this new and advanced version of candles, to include these candles in their charts to provide better decision-making tools for the traders, analysts, and investors. They can do one thing, that can put the option of choosing either version 1 or version 2 to be incorporated in the setting itself. There can be options in the setting whether if someone wants to add version 2, so the color of the wick and tail will be changed. Otherwise, they can opt for the version 1. They require less coding modification. I think the existing candles are already been coded, and it will require a very few coding tweaks to adopt these new candles. They are simple in presentation, but yet they are able to provide volatility information in a much better way, and the visual presentation will be definitely easier. So I hope that these candles will find place, in the armory of the stock market traders and analysts. And I hope that someday these will be included in the charting softwares. so that we can get the data a much better way, and we can analyze as a trader, as an educator, as an investor, or as an analyst. We can use and all get benefited of this new concept. This simple thing is this advanced and renewed candles, or the AR candles, are the original work of the author or the presentation, and he is having complete copyright of this concept. Any use, presentation, or representation of this concept, presentation, or video, either in full or in part for educational or commercial purpose, require prior written permission from the author and proper referencing while using it. Thank you very much. So friends, this is the thing. This is a new concept which personally I was working on it, and I felt that this should be included. It's a high time because the volatility has been increasing in the stock market, and it's going to increase day by day. So these factors should be included in the candles itself while doing candlestick analysis. It's nothing complicated. It's not very messy. The presentation will be effective and easy, and it will help the traders or the users a lot. So once again, I appeal to all the chart providers to consider and include this. And further, I appeal all the users, all the, everyone who is watching this video, that if you like the concept, if you agree with the concept of this advanced and renewed candles, so please share it, forward it to your friends, share it with others, so that most of the population, most of the trading fraternity will become aware about this. And yes, I have included, I'm just in this presentation in a PDF form. I'm just adding the link of this PDF will be added in the description, so that you can download it, you can read it, thoroughly. And if there is any issue, you can contact me for further discussion or anything about that. So hope you like this concept. It's a new concept. I tried my best from my side. If you like it, please share it. And if you are new to the channel, please subscribe it. Okay, we can make a difference together. Thank you. Have a great trading and have a great profitable future. Thank you very much. Bye-bye.